break down for us what the basis is behind the Fed's concerns about asset prices, as well as Chair Powell's warning about this lengthy recovery.
So the Federal Reserve's focus now is turning to how much stimulus is in the system to give the economy some oomph on the rebound as states begin to reopen businesses. The question is, are the fiscal authorities going to step off the accelerator here and then leave the economy vulnerable to a double dip? So you had the Fed warning in a financial stability report on Friday that if the coronavirus does prove to last longer than expected, that asset prices, including commercial property, are facing significant risks of declines. And you see Chairman Powell talking about, again, the potential for a second wave of the coronavirus, causing the recovery to stretch into next year and not just the second half of this year. We may hear more from Chairman Powell tomorrow when he speaks at Congress about the state of the recovery. And the key thing there is to look for any further signs that he would like to see another round of fiscal stimulus.
Chris, as ever, fundamentals being ignored, comments like this being ignored as well. U.S. futures are up. How come nobody seems to be listening to these warnings?
Yeah, it's interesting, Rish, and we saw this with some of the heavyweights in the hedge fund and private equity industry as well. Druckenmiller and Tepper among those, with some pretty negative comments about the fragility of the market recovery that we've seen since April. But investors, for now at least, are pretty focused on the optimistic signs of reopening economies. Governor Newsom of California is saying 75% of the California economy is now reopening. Just this morning, we heard Apple says 100 of their stores around the world are now open for business. You've got some parts of New York State also reopening. This is the focus for now, but they're setting aside, these concerns about, a long and troubled recovery.
And Chris, what are the takeaways from Japan's GDP report, and how should we interpret that smaller than expected drop?
So this reflects, Selena, the fact that Japan was fairly slow to adopt lockdown measures in the early part of this year. Remember that they still were planning to hold the Olympics this summer, for example, in the first quarter. That changed dramatically in the second quarter, and we had Economy Minister Nishimura out this morning with some pretty cautionary words of his own today about how we are likely to see a massive hit in the second quarter, and focused on the need, not dissimilar from the Fed remarks about what's needed in the U.S., about another wave of stimulus. So Prime Minister Abe's government is planning a second supplementary budget. There's a lot of concern here, Selena, about a return to the pre-Abenomics era of deflation, stagnation. Bank of Japan is concerned that companies are going to go back to hoarding cash, not investing, not focusing on pay increases. So the concern is that they've got to break that early and put more stimulus into the system to help the rebound.